So, Jim, tell me, how much do you think it would cost to buy all the homes in Fife?
I have no idea, but I tell you what, let's find out. Cue that VT. I'm interested to find out where this question came from then. Where did it come from?
Would you believe it? Okay, so it was actually one of the landlord's daughters. So they walked into the office just before Christmas,
Yep,
and which I know seems so long ago now, a distant
it's about
memory.
3 months away.
One of the Fife landlord walked into the office. His daughter was there, nosing around and curious, and asked the question.
How much would it cost to buy all the houses in Fife?
Mhm.
I actually have worked this figure out, believe it or not. I didn't know that answer off the top of my head, but I kind of said I would find out and I would look into it and I'd find out more about it. So I worked out the total value of the properties in Fife itself, and just for a bit of fun, I worked out how much they've gone up in value since since his daughter was actually born in 2010. So
Okay.
here we go. In the last 14 years,
Yep.
the total value of property in Fife has increased by
Drum roll.
56%.
Wow.
56%, aye. Or 12.7 billion. Not as much
You
as Larry Page or Sergey Brin or Jeff Bezos is worth, but it's still a lot of money, 12.7 billion. To actually, the total value to buy all the properties in Fife for the valuation right now is
Mhm.
35.46 billion. Still not as much as Larry Page and Sergey Brin.
No, could have a wee
And
bit of
Jeff
change
Bezos.
left.
So basically, they're worth more than all the property in Fife, these people. I mean, interestingly, the FTSE, let's look at this as well. The FTSE 100 stock market has only risen by 38.5%. There you go. As I
Yeah.
said, which is the one that increases the most? What's the one to stick to? It's property's gone up by 56%, in Fife anyway. Stock market's increased by 38.5% in that time. And when you compare that to inflation, that's the retail price index, it's actually gone up. The retail price index has gone up by 51.1% in the same 14 years, which means that the stock market hasn't outperformed inflation. It's actually, if you've got your money in the stock market and you put it in 2010, you're more likely to have eroded your savings. Yeah, I mean, fair enough, you've made about another 38%, but you've actually, inflation's been 51%, so prices have gone up by 51%. But property has been very resilient in Fife. It's gone up by 56%. So fair enough. I mean, you've got a net, you've what we call you've hedged yourself. In other words,
Yeah.
you've protected your savings against
Mhm.
erosion in wealth. Plus the
Mhm.
fact if you've invested it in as a buy-to-let property or service accommodation and you've been making money out of it, that is not including for property at the 56% the amount of income you've generated out of it either. So you've actually beaten inflation by investing in property. You've
Yeah.
not beaten inflation by investing in the stock market.
No.
A great revelation.
Absolutely.
I mean, when you look deeper into these numbers,
Mhm.
Sophie, what is the average price for a home in Fife right now then?
Right now, the average price for a home in Fife stands around 180,000 roughly. Now, for regular readers and watchers of, the Fife property market blogs that we do in the articles and what we discuss in great detail, it wasn't going to stop there. We weren't just going to give you that kind of overall figure. We have split the property market down into individual property types just to give us a better indication. So we're going to look at those numbers and work through them. Now, it is quite an intriguing dynamic when comparing the total value contributions of the different property types, and this will be interesting depending on what type of property you might be sitting in right now. So we're going to start with detached houses. Now, they have an average value of 353,000, which is a total, out of obviously the Fife ones, a total of 13.7 billion. So that's for detached.
Wow.
Yep.
A
Then
detached
we
house
go.
at 300, the average value of 353,000 is quite a big number, eh? Especially in Fife, considering the average salary is probably around about 30 to 33,000. So then we think about the affordability levels for that. But then I suppose we start off at apartments. So let's go down that then and talk about the numbers. And you'll probably give us the numbers for apartments as well and flats.
Yeah, so we'll move down a notch to semi-detached. So semi-detached, they've got an average value of 222,000, which contributes to just under your 10 billion, 9.2, we'll say for argument's sake.
That's pretty affordable for somebody maybe moving up from an apartment, isn't it? 220,000. Yeah, that's pretty good.
Absolutely, within that affordability range, definitely. And then moving down then, because even a terraced or a townhouse, again, that could be for somebody that's upsizing from an apartment or a flat. But a terraced or a townhouse, they average about 187, which then
Which is about the average right through Scotland. Scotland's about 190,000 for the average price. So again, doing quite well, isn't it?
Absolutely, because then that is a chunk of 7.2 billion.
Then
going to your flats, your apartments, they have a kind of average value of 123,000, just shy of 124, which again, affordable range, especially when you think you've even got flats and apartments that come under the 100 as well. But that contributes to a substantial 5.186 billion. So a good chunk of it as well.
Yeah, I noticed that Jack had actually said that's actually quite a lot when you consider and you take into account the land mass that Fife actually is. And then Carla actually says, "What the heck are you talking about?" Hopefully, you've got the just now about what we're talking about. We're talking about how much would it cost to buy all the homes in Fife, but we're also breaking it down into their various categories about what the average price is for the different types of property, like detached, semi-detached, terraced, and apartments and flats as well. I mean, it really is a remarkable growth in property values over the last decade and a half, and it reflects the fundamental strength of the Fife property market, I would say, especially a 56% improvement. I could attest to that because I'm a buy-to-let investor, and I do invest in Fife heavily. I have most of my stocks in Fife itself. But yeah, our property has actually gone up, and some of them have actually gone up significantly more than that. If you can pick the right properties and understand where the value is going to add over a long period of time, I genuinely think in Fife and in most places that apartments and terraced properties tend to be the ones that will appreciate a lot quicker in the future, a lot more value in them, and purposely because they're more affordable, as opposed to when you look at detached houses are almost, for example, a detached house in Fife on average is almost 3 times the price of an apartment.
Yeah,
that's crazy, eh? And then when you think about if people are wanting their running costs and their mortgage costs and their affordability is wanting to be a lot less, then it actually makes absolute sense to do that, doesn't it? But what does it then mean? This is the question I'm going to ask you, Sophie. What does it then mean for homeowners, home buyers, and landlords as we're actually moving we're in 2025 and beyond?
Yes. Oh, yes, we are nearly at the end of January before we know it. So the Fife property market remains kind of underpinned by several key factors that ensures its resilience. And, amid a broader national and also global economic uncertainties, property ownership continues to be stable. Rewarding that long-term investment for Fife homeowners, like you've just obviously touched on, whether it be buyers, landlords, etc. But while market conditions may fluctuate in the short term, history has shown that property values in Fife tend to weather these ups and downs and emerge stronger over
Yeah,
time.
stronger over time. I could attest to that, definitely. I mean, I've been buying property in Fife for 30 years, just over 30 years. So I understand where it first was. I mean, 30 years ago, I was buying property at 10 and 15,000. I mean, that's crazy numbers today. You wouldn't even think that that's possible, and it isn't. But that's how it was. But it was the same affordability levels, because 30 years ago was a completely different, completely different thing. Interest rates were at record highs, way beyond what it is now in terms of getting a mortgage. And also as well, what you found is less and less people were buying, and affordability in terms of the salaries were similar as well. In terms of it was actually cheaper to own a house now than it was 30 years ago, in real terms. It's quite interesting. Tommy, actually, I'll bring Tommy up in here. This is an interesting comment. Buy them all and turn them into housing associations, so people don't have to spend a third or half their wages, or no, a third, or well, people don't actually spend half their wages on average. On average, according to the Scottish Government, on average, right through Scotland, people only spend about 27% of their salary on rent, and housing costs like that. So that's about quarter. That's not a third or half, but that's a factor of the Scottish Government. But the interesting thing about that, Tommy, is if you buy all the houses in Fife and turn them into housing association properties, then you've still not solved the problem with homelessness, because you've still not created more supply. All you've got is the same properties. So it doesn't solve homelessness as a result. The new build property, or the building new property, is obviously the solution to that. It's interesting, Jack actually said as well, prices are going up as a lot of people from all over the UK are moving up this way, pushing up the value. East Neuk has a lot of families, in particular from other areas. It's quite interesting because predominantly they're beginning not to have that. I mean, it's purely, and you can see that because there's more stock on the East Neuk market, there's more stock in the St Andrews market, and the areas where prices are higher, because of the draconian legislation put down by the Scottish Government in terms of second homeowners for double council tax, and also for serviced accommodation having licenses. So we've noticed actually people selling up, and we've noticed a decline in the number of buyers outside of Fife actually looking to buy even second homes in Fife. I mean, there's one St Andrews estate agent, which will name nameless, it seems to be going about saying there's an abundance of second homeowner buyers and for Fife, and it's like, that's just not true. That's just not true at all. That just does not exist. There is not. They've disappeared, basically, and that's why you see a lot more stock, and it takes a lot longer to sell in St Andrews and East Neuk just now, as opposed to when you come to Central Fife and West Fife. West Fife sells within about 1.5 months, if not 1 month. Central Fife actually is about 2 months, and when you go into East Neuk, it's about 4 or 5 months to sell on average, and you go into St Andrews, it's about 6 or 7 months on average to sell. On average. Some people are a lot more than 6 or 7 months in St Andrews. Some people are just less than that, but it's an average. You can do these numbers yourself, because what you can do is you go straight in to Rightmove, for example, and you can type in KY16, which is the St Andrews area, really, and we know for a fact the number of people that buy every month in the KY16 area on average over the last few years is about 20. So if you've got about 80 to 90 properties on the market, or 100 even, you've got 5 months worth of stock sitting there available to buy. So that's why the average is 5. You could do the same with East Neuk as KY10 and KY9, which is the start of the postcode areas, which is Ely, Earlsferry, and then you've got St Monans, you've got Pittenweem, you've got Anstruther, you've got Crail. So you've got these ones, that's KY10 and KY9, and that comes the same. And you can do the same with Leavenmouth, it's KY8. You can do the same with Glenrothes, which is KY6 and 7. You can do it with Kirkcaldy, which is 1, 2, technically 3, and possibly 4 and 5 in there as well, KY5. And then you can do the same with Dunfermline, which is KY11, KY12. And KY13 bolts on, but it's not significant enough to actually make a fundamental difference. So yes, I could see your valid argument for these there, Tommy, but you're not creating any more supply. Therefore, the homelessness issue and the availability of homes is still a major problem. And I'll say it right here, the Scottish Government needs to get their act together and start building a hell of a lot more affordable homes. But they don't seem to find the money. It's funny, they can find the money for something else that's just not relevant, it's not as important, but they can't find the money to build homes. You decide. Vote with your feet at the next election, by the way. Decide whether you're actually better off or not. And if you're not better off, then maybe you should be thinking about someone else. But I don't want to get political on that.
No.
Definitely want to talk about the growing rental market. Let's talk about that. Let me just cover that, and then you could talk about supply and demand of new homes in Fife, Sophie. So for landlords, for example, let's talk about that. The rental market in Fife remains an area of significant opportunity. There's no doubt about that. Demand for rental properties is still robust, driven by population growth, changing lifestyle preferences, and continuous interest in the area for those seeking a quieter pace of life compared to the major cities. And the rental market's quite good in Fife. And the reason for that is not because people can't buy houses. It's mainly because if you're only going to stay in a flat, for example, this is the mistake I made in the beginning. We stayed in our flat for about 2 years. Okay. So when I stayed in my flat when we bought our first flat, we stayed in it for 2 years. We spent an absolute fortune doing it up. So we spent new windows, new doors, carpets, curtains, decorated paint and all the rest of it, tiles for the kitchen, everything like that. I did most of the work myself when I did that. So we spent a fortune on it, and we only stayed there 2 years. So we spent a fortune, and I think we bought it for 20,000 at that time, and it was a 2-bedroom. So the entry cost as well, though, we had to arrange a mortgage. So then we got arrangement fees on our mortgage. We had to add on that mortgage, and then we had to pay. I think at that time it went up to about 12% interest rates. We were paying an absolute fortune. Yeah, you were paying, never mind 50% of your salary. It was about 2/3 of your salary. It was going on mortgage payments. So that can happen as well. That's what rent doesn't do to you. Rent takes out the volatility of mortgage rates going up and down, because basically it's a set price, and it very rarely goes up significantly over time, over the short term. You could argue and say in the last 5 years, but you're taking it in isolation. If you talk about rent for 20 years ago, rent hasn't gone up significantly in comparison to inflation over the last 20 years. But the pundits, the people that want to justify their stance, actually deliberately take an isolated bit that actually makes it look like it's gone up horrendously quickly within a short period of time. But it's only because it's never gone up for the 15 years before, and it's only started to go up for the 6 years after, or whatever it is. And that's where they take the soundbite from, about it's gone up a huge amount. But 15 years before, it never went up at all. It actually probably went down in real terms. So there's the differences in terms of where it is, but definitely the demand keeps rental yields steady, and offering landlords and investors potential capital growth at 56% over the last 14 years.
Exactly.
You can't argue with that. Definitely capital growth. So as Fife communities to attract young professionals and families due to an excellent transport links, Leadmouth train station being one of them. And obviously you've got the Cooper's train station as well. You've got Lucas train station as well. So you've got a lot of good train stations. Markinch train station. You've got Dunfermline. You've got Aberdour. You've got all these scattered throughout Fife. So there's good commuter links now, especially to what is the southern part of Fife, which is the Leadmouth area, Largo, and the East Nuke, because they're now serviced by the new train station that's coming to Leven, and that's £100 million investment, and that will pay dividends over the next 5 to 6 to 10 to 20 years and on from there. So there's a huge growth area. There's no surprise in that area. Starbucks has turned up, McDonald's has turned up, all the big major players in terms of investment have actually turned up in terms of all these big huge organizations. They do all their demographics and their information way beforehand. They spend millions on this, so there's no surprise that that's going to be a high investment area and a good appreciation area for anybody that's wanting to invest in Fife. That's probably where I would be planting my marker now, in terms of, well, I have been over the last all these years. So it makes absolute sense to do that. And the appetite for quality rental homes remains strong for landlords considering expanding their portfolios. Now may be an excellent time to explore options of semi-detached to terrace housing markets, even apartments, if the service charge is reasonable. I have an apartment, 4 of them actually, in Kirkcaldy. And the rent is actually quite high in comparison. As far as I'm concerned, it's high, but it's $550 for a 2-bedroom. That isn't probably, if you look at everybody else's rents in the Kirkcaldy area, but I actually have to pay £90 a month for every apartment for the factor
Wow,
fees. Yes.
that's a lot.
Yeah, so and that's the problem with new builds, with new build apartments. You're getting nailed for factor fees, which are disproportionate to your renting. So effectively, in real terms, I'm only getting 460 out of that. But that's it is what it is, and that's the way it is, and and it's okay. That's one of the things you just have to bear in mind. Hence the reason why I said you've just got to make sure the service charge is actually reasonable. Now, that actually provides for a good balance of affordability and rental potential. Let me give you an example here. Can I just say that historically, landlords have never actually increased their rents when the tenant's been in situ, in other words, been in the property. It's been very, very rare for private landlords to do that, myself included. But because they brought rent controls in, they taught every single landlord in Scotland, the government had brought it in, to increase their rents every year, just in case they bring them back in again, when they had no thought about doing it at all. It's like the whole thing about you teach a dog to do something, but the Pavlov's dog, if you keep feeding it and ringing a bell all the time, and keep feeding the bell and ringing a bell, then you take the food away and you ring the bell, the dog starts to salivate still because it thinks it associates it with that. So what the government's done is they've actually taught every single landlord to really think about moving up the rents every single year as a result. And with impending rent controls, that's going to teach them again to do that, because landlords are concerned that they're going to come in, they're going to freeze rent controls, or they're going to put them at a value which they can't recover any cost because of inflation, and it's going to make it prohibitive for them. Therefore, what's going to happen is they're going to have to increase their rents to market rates. So I think you'll see rents going up even more in the next 2 or 3 years as a result of this, because of the legislation. If this legislation didn't exist, rents wouldn't be so high. I can guarantee you that. My rents wouldn't be so high. But I'll be honest, my rents is very affordable. My average rent is around about £500. So nobody can sit there and say, oh, well, can I afford that? It's like, that is well within affordability levels in terms of that. But that is my average. So that's where I am in terms of where I am. I don't need to increase huge amounts, and I'm no bothered about that. It's the most important thing is to make sure that tenants can actually get access to good quality, affordable rental property. But the rent controls are actually stopping them doing that. It's the rent controls that are stopping them, not the landlords. The landlords have been forced into a position that they're having to increase the rents in order to do that. Okay, let's talk about the supply and demand of new homes in Fife then.
Yes, let's talk about that. So moving to another reason for optimism is Fife's persistent undersupply of new housing. Now, I know some people will say, parts of Fife have looked like building site for months, whether it be, where academies, whether it be in Markinch, Kirkcaldy End. There is definitely a lot of sites, but there is a persistent undersupply of new housing. We aren't building enough new homes in the area. And with demand consistently outstripping supply, property values are, then supported, reducing the likelihood of significant price drops. And this is something we kind of speak about in quite a few shows. I know me and Richard have spoken about it as well, in terms of there's not enough of new housing. And as well with that, yes, they've got not enough new housing, but also they're not building enough of some of the right types of properties either for what we need.
It's purposely the reason that they're not building the right types of property is because they know there's more profit in building a property over 2-storey than a bungalow over 1-storey, because it takes up far bigger landmass as a result, and it's a higher profit for them to have on 2 stories on a smaller space, because they can get more houses on there as a result. So that's the reason why they're doing that. But there's no impetus, and I have asked about this question to the government and also to local councils. Why are you not then saying, as a condition of planning, you've got to build a certain amount of affordable homes, which they do. They can opt out of that, by the way. And then also you've got to build a certain amount of one-level homes, bungalows, for an aging population who need to downsize into a bungalow, or even even right size, if that makes sense, because they're, you know, it's maybe the same floor space that they've got for the existing one down at the bungalow, but it's essential that you have to do that, because then that releases the bigger property for somebody to upgrade to, a family who would actually fill that. Whereas if you've got two people rattling about in a big massive house in St Andrews, which is what happens, and I've come across it, but they've got nowhere else to go to stay in St Andrews because there's no bungalows getting built. No one's building them. The only houses that are getting built are £700,000 and £800,000 houses. It's crazy. Absolutely crazy. So it's all down to the political will from the governments and also from the councils to say that no, this is what you're needing to build. We need you to build this because when this is what our demographic says and how it's coming. I mean, you know, if somebody's staying in the area and they're 50 years old, you know they're going to be 70 in 20 years' time. And obviously they're going to need a smaller house because their kids have grown up and they've got children and they've got all that information, but they fail to plan ahead and actually forecast and extrapolate to that point where they know what's going to be needed in the future. So they're not working in tandem with builders in order to do that. All they're doing is they're working in tandem with builders in terms of what do you want to build? Yeah, that sounds about right. And that's about it. That's all that there's no coherent housing strategy at all or policy about what they need to do. And there's no drive to get more houses built. There tends to be we've not got enough money. But as I said before, it's all of a sudden it's like, how did you find the money for the other things that appeared from nowhere? But the people, you know, it were never relevant and almost turned up on our doorstep. And now you've got millions and millions of pounds for them, but you've not got it for the people that were here already. Where did that come from?
Yeah.
And the key to that is people will always find money for what they want to do. Yeah, absolutely. So that's supply and demand. Absolutely, I support that straight away. We should supply is outstripping demand is outstripping supply for lower end of the market. Sophie, is that about right? And then probably I think supply is outstripping demand for the upper end of the market.
Yes, the higher price brackets. Absolutely, definitely.
So we'll probably see a realignment. There'll be a two-tier system. It's getting masked overall by the average property price, where possibly higher priced properties will come down a bit in value year on year, and the lower priced properties will probably go up a lot more in value than year on year than the higher priced ones, if that makes sense.
Absolutely, yeah.
Let me just, I'm quickly going to look. Average price in Fife, yep, okay, gone up 3.4% in the last year, the average price in Fife. The health of the Fife market is actually year on year, still doing pretty well. At this time last year, there was 552 houses sold, and this year at this time in this month, there's 542 houses sold. So transactional numbers are bearing up well as well. And right across Scotland, you've got 8,495 properties sold last year at this point in time in Fife, no, in Scotland, sorry, in the month. And this time in Scotland, you've got 8,360 sold, which is good. That is truly the health of the fight. Any property market is the number of transactional values that are getting sold at any one point in time, and not necessarily the actual price. Price is not a reflection of how healthy a housing market is. It's volume transactions year on year. In other words, you've sold 1,000 the year before, you'll sell 1,000 this year. I can't emphasize that enough. Anybody that says to you house prices are so important, the only reason they're important is because you need to know how much you're going to spend to buy a house if you're a first-time buyer, for example. Or you're coming out of rented accommodation and you need to get back in the housing market. That's the only reason house prices are really particularly relevant. And also affordability as well. That would then drive that. But if you've already got a house and it's worth 300,000 and everybody's house goes up 5%, then the house that you're going to buy will have gone up 5% as well. And all you've done is hedged yourself by having a house at 300,000, which is now gone up to 315,000. But the house that you're going to buy, if you're going to buy another house at 300,000 before, that'll have gone up to 315,000 as well. All you're doing is trading like for like. You're just hedging yourself against the risk and volatility of house prices going up and down. That's all you're doing in terms of house prices. So that's the only reason to have a house. If you're moving within a short period of time as well, this is what I was going to emphasize. We talked about the entry and exit costs are so prohibitive. You're probably better off considering rent, especially if you're it's like people that come up for a contract, maybe a university to be a tutor for maybe a couple of years. They're going to be a lecturer for a couple of years, and it's going to be part of their postgraduate to be a lecturer, and then they're going to come to the area. They predominantly just rent, because the cost to them to buy and then the cost to them to sell is probably just as much as what the rent is. But then the great thing is you've not got any guarantee you're going to sell, have you? Especially in St Andrews now. So when you think about that logic, then it makes more sense to actually, you could walk away within 1 month's notice and actually say, that's me finished with the rent. No other commitment.
Yeah,
just like that. Just like that. I've not got to pay off an early redemption fee. I've not got to get a solicitor to go and find out what I've got to pay for there. I've not got to do any conveyancing. I've not got to get an estate agent to sell my house. I've not got to cross my fingers and hope my house gets sold for the right price so I can get moving somewhere else. It's all these different things. I've got to sell to buy. That also comes up as well. If you're in rented accommodation, have you got to sell to buy? No. You could buy it straight away. You're a cash buyer. You're in a luxurious situation, especially if it was a buyer's market or a balanced market. You've been in a really good situation in the fact that you can negotiate a good deal there. So there's the huge advantages of renting. But we jump to long-term ownership. It's possibly the way to go, because you build it up over time, and then you release it when you downsize. So you build up to a big massive house, build up appreciation, you then downsize to a lower value house, you release all that capital. It's all tax-free. Well, it's all tax-free for now until the impending government gets their hands or their thought processes around it. Could we actually charge capital gains on people's private residence? That could come. You never know.
Nope, you'll never know.
But we mentioned about borrowing costs, didn't we?
Yes, let's touch on that before we finish.
Borrowing costs? What's your thoughts on borrowing costs? What are you thinking about?
Okay, so although interest rates are higher compared to recent years, the historic lows, they do remain very manageable by historical standards. So for those looking to buy their home in Fife, this can still, represent an opportunity to secure a mortgage and move up the property ladder, or even get on the property ladder. Meanwhile, the Bank of England's continued efforts to stabilise the kind of wider British economy offers hope that rates may drift downwards. This obviously then will boost buyers' confidence, which then in turn, beyond the financial figures, Fife does have a lot to offer. We've touched on it in this show, and we spoke about in previous shows, the continued investment in local infrastructure, whether it be schools, public amenities, commuting links. It's that really big investment, as you've obviously just said, 100 million investment just into the KY8 postcode. It then enhances its appeal as a place to live, work, invest, retire, bring up a family, all of the above. Now, as always,
infrastructure. Do you know what it reminds me of? You maybe not remember this because you're probably too young. Youth is on your side. Do you ever remember a Sim City? Do you remember a game called Sim? Yeah, it's Sim City. That's effectively what that is. On a basic scale. On a basic scale, this is what that is. It's building, shops. It's building, it's building schools. It's building roads and everything to build a place. For it. It's interesting. I'll pick up on Jack's comment here. Jack said, actually, this is quite good, Jack. New builds are too expensive. I can't disagree with that. And a lot of builders don't like to build massive estates because they require to build more social housing than they're required to build, and they don't make money of them. Well, actually, let's give you an insight into that, Jack. New builds, absolutely, they are expensive. The reason they're expensive is because the government, the Scottish government, has raised the standard so high for energy efficiency. No other government does this, by the way. They've raised it so high, the bar so high, and they've got all these builders have to put in huge amounts of energy efficiency measures and all these different measures in building control, which shoot the cost right through the roof. I'll give you a classic example of that. If you talk about new build, the average price, and this is the Scottish government statistics right now. The average price for a new build in September across Scotland was £322,000. The average price for an existing property to buy was £189,000. That is a difference of £133,000, all because the government has raised the standard so high and the builders have to spend so much money in doing that. This is why the council comes back to the theory we'd be better off buying the properties back off the people for the local authority properties that they sold off. We'd be better buying them back because it's cheaper to buy them back than actually build new build properties. They've shot themselves in the foot, the government. They've caused this mass problem because of their standards raising so high in terms of that. So new builds. The social housing issue, yes, they sometimes have to build more social housing, but they don't necessarily need to do that. They can actually buy their way out of that. They can actually pay a fee and actually not do that for that reason. That is definitely it. And that's what you've got to think about. These are all, it's a big connected whole problem here. You can't just solve one problem without causing a problem somewhere else. So it needs to take some sort of input overall to see an overall picture to this problem and not just keep sorting things in isolation. And I think that's what the government lacks right now. I think that's what most governments lack right now. Dare I say, they're full of academics. And maybe it's the fact that they don't have any commercial acumen. They don't understand how doing something over here has an effect on something over here, and changing rent controls. How putting rent controls in place and rent freezes in place causes an increase in rents for tenants because landlords get fearful. Also, landlords exit the market and supply gets restricted as a result.
Yeah.
And that is, and they've got nothing. They've got nothing to replace it with. That's the point. And you're right that solar panels. They insist on installing them, and that's what it does. And you're seeing stories now about ground source heat pumps, about the fact that it's costing people more money in Scotland to run a ground source heat pump and electricity costs or whatever it is than actually they're getting from the ground source heat pump. So it doesn't even some guy actually invented the ground source heat pump said they don't work in Scotland, by the way. It's a different way. What does that say for everything? But they still insist. It's again, I don't think it's joined up thinking by the governments that we've got. Definitely not. So yeah, borrowing costs in Fife, interest rates. Well, do you think interest rates will reduce next month? It seems to be talk about it. They seem to be optimistic. Oh, inflation's dropped. Wait a minute, inflation's gone from 2.6 to 2.5. That's hardly a flag waving event. 0.1% inflation's gone down, really. And we know utilities are going to go up in the next 2 or 3 months, about 2 or 3 increases up to April. I mean, it's a fact. It's what's going on right now. So to sit there and say inflation is going to be under control, which it isn't. Remember, it's at 2.5. It's no 2%, which is their target. And then say other things as well. It's like, it's just it's no joined up thing. I think there's a lot of speculators out there trying to give that impression that interest rates might go down. I'm not convinced. However, there might be a lot of pressure, especially with the Bank of England saying before Christmas that they think it will probably be in February. So I think out of a token gesture, if nothing else changes where it is now, they might do the 0.25% in February, but that could be it for the rest of the year. Gauging on what they were saying.
We've not got long to wait to find out.
Yeah, definitely. Final thoughts on this. What could you advise somebody right now, Sophie? If you were going to advise them, what would you advise them? Would you advise them to speak to an estate agent first before considering selling, weigh up their options? Is that sort of thing you would be doing?
Oh, absolutely. You need to be making informed decisions, and you can only do that by getting the facts, getting your ducks in a row, and knowing exactly what your next steps look like. Whether it be you've got a property to sell, you need to speak to an estate agent. Whether you're a first-time buyer and you need to get your mortgage in principle, we can put you in touch with a mortgage advisor. Whatever your next steps look like, pick up the phone to us, because we can then help you make those informed decisions, because that's essential. It is a big thing that you're, whether it be just getting onto the property market, whether property to sell, it's a big thing. So you need to know that you're doing it correctly. And, you know, we're happy to discuss your property goals, whatever that looks like. As I say, if you're a first-time buyer, if you're a landlord looking to expand your portfolio or looking to sell, that is your dedicated time with that estate agent to ask all your questions and know what your next steps look like. So we're always happy to help.
Perfect. Thanks for coming on, Sophie. Really appreciate it. And thanks for everybody tuning in. And we'll catch up next week for next week midweek show. This Saturday show, 9:30 on Saturday, we will be talking, if you're a buy-to-let investor, or you think of buy-to-let, or if you're thinking about investing in buy-to-let, we're going to talk about, is buy-to-let actually broken? The facts, the figures, the future trends for private landlords and investors. That's going to be at Saturday at 9:30, so watch out for that one. We'll be live on Saturday. See you then. Bye-bye for now.
Take care. Bye.